Hey, welcome back to the Hub channel. My name is Brandon. We're going to be doing the U.S. market update here with Rob, the man Roy, and we got a lot of stuff that we're going to cover. Obviously, a lot's been going in the market. If you saw NVIDIA this week, you saw what happened, and if you didn't, then I'll be shocked because obviously everybody's talking about it. So we're going to be talking about it today on the show. We're going to be going over some other headlines, and then, of course, we're going to be hitting up your symbols. So if you have anything that you want to go ahead and put in the chat, do that right now so we can hit that up when we get Rob here on the screen. But let's go ahead and bring Rob in here. Rob, how is your day going? What are you seeing in the market, and what's catching your eye right now?
Well, first of all, happy Friday to you, Brandon. Good to be here. As you can see, I'm in my full Red Bull racing attire here. A little bit of turmoil in the camp this off season, but I'm confident we'll have it all sorted out by the time it's time to go racing again this next season. We still have Max, so that's the most important thing. But taking a look at the markets, we are trying to follow through a little bit from yesterday's big move, as you said, on the back of NVIDIA's earnings. We did have the PMI services sector report that came out, and that's been a hot sector, and that was a little tamer than expected. And so maybe that put a little bit of maybe we are going to get some rate cuts in June. The Fed minutes on Wednesday were a non-event, and as I expected, just a lot of chatter back and forth. And now all the Fed heads are out getting their 5 minutes of fame with their interviews and stuff, and some are saying they want to see more evidence that inflation's continuing to cool before considering rate cuts, etc. But the big thing was we had this gap up yesterday on whether or not it was the heels of NVIDIA. Probably was, because after NVIDIA reported their earnings, the NASDAQ futures were sky high, and then the rest of the futures began to follow. They weren't initially, but then they started up as well. I don't like the fact that we gapped up. It's nice that we made a significant break above 500. I think that's telling. We're slightly overbought, not tremendously so. This little gap here, you guys have been watching, I don't like gaps, so I'm a little concerned about that. I don't think it would be too negative, Brandon, if we saw a retracement back to that 500 level, tested it as support, filled the gap, and then I think that would free the market to go a bit higher here. We have this price up around 523, 525 or so on the Wave 5 projection that the algorithm likes. So that's higher from here. And one of the things that I really wanted to look at was to see today if we were going to get a relay followed suit. And the Wave 5 was at this previous high over here on the 12th. And so I wanted to see if we broke that 440 level, would that 5 move over, or would it relabel to a 3 to match the S&P? And it didn't. It just moved the 5 over. So that's something to keep an eye on as we move into next week's trade. You can see not as much separation from the 10-day moving average here on the Q, so that's constructive for a continued move higher. NVIDIA is falling through a little bit in today's trade. But it's rates, Brandon, that have me a little bit concerned. We seem to be just kind of crawling to the upside here with rates, and they're down a little bit today. But we don't want to see this move to the upside here go much further. That's going to be challenging for the market, and especially the big tech guys. And then the dollar here, I think, is interesting. Well, there's the drop on the 10-year there today, as you can see, a little bit lower, which is constructive. I think that's good if we continue that trend. But then here's the dollar. We had this move lower. I feel like that came out when the PMI services report was a little tamer than expected. Maybe pricing in some rate cuts there, but then the dollar rebounded and is completely flat today. So we're right in this area of 104. Why do I keep talking about the dollar? Well, it affects what's going on internationally with the exchange rates, et cetera. And the higher the dollar goes, the harder it's going to be for international companies on their earnings reports with the exchange rate hit that they're taking, the stronger the dollar gets. So those are the things that I'm currently watching. The VIX is back down a bit today. We had the gap up, and then right back down. We're kind of in a channeling formation here, and if you draw a line just right through the middle of all that, it does look like we're in a little bit of a slight uptrend, nothing significant. So I think that foretells, we talked about this in the insiders meeting last night for our ewotrader.com alert subscribers, that volatility is probably going to be the name of the game for the rest of the year. What do you think, Brandon?
Yeah, I mean, I agree with everything you said there. It's interesting when you took a look at that S&P chart to see the difference between that and the QQQ, just because of what Nvidia's doing and what kind of what they're pulling out to help the QQQ out so much. But the S&P does look like it needs to almost break down before it can move higher on your chart there. So I mean, just watching that kind of action, that the way you have that Elliott wave set up just clears, I mean, it paints a clear picture for me. So I'm glad that you brought that up. We do have one stock that somebody wants to look at from the chat here. This is Manuel Costa, LLY. Let's take a look at that one, and then maybe we can kind of bounce back over here and check out some more of these things that you're looking at that I want to see.
Sure. Eli Lilly, not a stock that we've talked about a whole lot lately. And look at that. Normally, when you see these healthcare stocks do stuff like this, and the healthcare sector has certainly caught a bid, it's known as a defensive sector. We had talked about before the rotation. We talked about this before the end of the year, that the Dow had that big run before the end of the year. Money was obviously rotating around. Money's always rotating in the markets, right? And it had moved into the Dow. I think some expectations of more recessionary signs in the beginning of the year. We haven't quite seen it yet, even though the consumer is pretty tapped out based on credit card data. But when you start to see the Dow, health sectors, and all those, some people at least are moving their money into what they consider to be more defensive type sectors in case we do get some sort of a pullback. But pretty impressive run to the upside here on Eli Lilly. You just don't see that very often. It was a little bit telegraphed here because you can see we had a big triangle pattern here, and I talk about this a lot with these triangles. You don't know which way they're going to break, but this one clearly broke to the upside. In fact, it's extended past where you would have thought it would go, and maybe that needs to even consolidate a bit sideways for a time period. But that's a pretty strong move. If we look at the DMI on that one, you can see that ADX is really high. So this wasn't a fluke moving to the upside. There was a lot of strength and buying behind that move on Eli Lilly. So it depends on how you view it, right? Is it the market broadening out from just the Mag 7 stocks? That would be a positive thing, right? Breadth is always a good thing. Or is it a sign that people are concerned with how far we've gone on the S&P and they're trying to protect themselves? That's the difficult question in this. But heck of a run there on Eli Lilly. I would imagine a little more consolidation is on order here. It's down a little bit today, but I don't think it's done going to the upside. And it really is an interesting indicator for where the rest of the market could go. Good stock.
Yeah, that was a great pick. The way that you drew that triangle there, I'm interested to ask you just a real quick question. When you see a descending triangle pattern like that, does it typically break to the upside out of that triangle pattern?
Great question. People talk about this a lot, and there's a lot of misinformation, I think, out on the internet. There's a lot of information that says if you have a symmetrical triangle, it can break either way. But when you have a descending triangle, it's likely to break lower. If you have an ascending triangle, it's likely to break higher. And that's just not the case. I've done a lot of work on triangles over the years. Created a system around them using a basic triangle and then modifying it for the best delta gamma relationship. And a book was written about it, etc. So it's kind of where my claim to fame came from. And I can tell you the data just says that when you have a triangle, regardless of the structure, ascending, symmetrical, or descending, it can break either way. And here's an indication. We had all these lower highs. You could definitely have drawn this is support here for a more normal looking descending triangle, and then yet the stock broke to the upside. So good point there, Brandon. I'm glad you brought that up as well. So any
Oh,
triangle can break either direction. That's the key for people to know.
oh, thanks for clarifying that because I saw just what you said, some misinformation it seems. So thanks for clearing that up for
It's
me
out there.
actually. We
It's out there. Yeah,
yeah,
it
we
really
have
is.
another question from Will. Do you think I think CRWD will break down like Palo Alto? What do you think about that one right there?
Yeah, and on the U.S. market update that we do on the Elliott Wave Options channel here on YouTube, somebody asked, could we look at CrowdStrike? So I'm glad Will asked about that. And Palo Alto has had a pretty good recovery today. Let me bring that chart up real quick because it always is good to look at other sectors. We did the same thing as an alert on GPC based on what the other auto parts had done. So that was a pretty rough downward move, and we're getting a little bit of a snapback. Now that's a huge gap. We talk about gaps. Gaps get filled. Now that kind of gap takes a while normally. I don't think we're going to turn around and run back up to the upside here. But if you had some speculative money and you had a very long-term horizon, I think you could do worse than sticking your toes in the water here on Palo Alto. The whole cybersecurity thing is not going away, right, Brandon? It's just going to get worse. And perhaps we get a little slow melt to the upside. The key here was that it held 260 on that drop, and you can see how that was support and resistance over the past year. And so the fact that we've bounced a little bit today is not surprising. We're way away from the 10, 30, and 50-day moving averages as detailed on the screen there. Again, I don't think it's going to turn around and run right back up there and fill that gap, but I think we could see just a slow crawl back to the upside on Palo Alto. So going back to CrowdStrike, the question was, is that going to follow along? Well, if it does what GPC did, genuine parts, used auto parts place, you could be a little bit nervous about their earnings report. I'm not sure when their earnings report is. Let's see if we can get the date here. It's coming up, so I guess that's why we'll ask the questions on the 5th of March. And yeah, I would be a little nervous in CrowdStrike ahead of that earnings, as you said, Brandon, based on the back of what Palo Alto did. So I would have some concern here. We got a little bit of a bid today, but yeah, you have to be a little nervous about that. Palo Alto is a good company, just as CrowdStrike is, and if they had that big of a drop, will CrowdStrike do it or not? You have to wait and see. They're different companies, but to see a drop the way we did on Palo Alto would certainly make me nervous going into earnings on CrowdStrike. I wish I could give you a read. It's been in a very long, extended wave 3. Seems ripe for a correction. It did come down and test this 50-day moving average, which held back on the 21st of February, just a couple days ago. But yeah, gosh, I'd be worried about that one. I think I would just sit on my hands on CrowdStrike ahead of that earnings report.
I agree with that, and I think that's the perfect way to say that on CrowdStrike. There, you're getting called the Triangle King here in chat. It looks like Will called you the Triangle King.
Oh,
The next question we have, Alexandra Colea wants to take a look at Bitcoin. Please take a look at that chart.
oh, well, I'm glad they asked because I was going to ask you about it, whether anybody else did or not. So I want to get your read on this. You're more of a Bitcoin guy than I am. You're the crypto king, and I put a lot of faith in your reads. I was going to ask you. I mean, obviously consolidating here at 52,000, we bounced back and forth. I don't think that's unreasonable considering the run that it had. So I would view that as constructive as long as we, just my read from the charts, and you know more about what's going on behind the scenes than I do, but just consolidating above where this wave 3 was, anything down to like 48,000, I think is still bullish on Bitcoin. But I was curious as to what you thought, because I also have the chart of Ethereum that I was going to ask you about. It's consolidating as well. And following the same move, you've been spot on. You said Ethereum would outperform Bitcoin, and recently it has. What are your thoughts? To me, I see constructive consolidation following a big run What are your thoughts on Bitcoin in the crypto world?
Yeah, that's a good read. The chart, the Bitcoin, remember Bitcoin's king, right? So everything's going to follow Bitcoin to some degree, even Ethereum, but Ethereum will continue to outpace Bitcoin going into May and possibly all the way into August, depending on if they punt all the way to BlackRock's ETF approval decision or if they approve a lot of those in May, those ETFs in May. But what's happening with Bitcoin right now is exactly what we want to see, consolidation. That's great for Bitcoin after that run. But the reason it's consolidating isn't just because of a chart level. It's more of a mathematical level based on the inflows of the ETFs. Recently, Genesis got approval to sell $1.3 billion in Bitcoin on February 8th. That started happening about 4.5 days ago. Grayscale's been dumping an extra $100 million of Bitcoin a day. And so that's going to put some sell pressure on Bitcoin. But the rest of the ETFs have been swallowing that up. But that's also been dwindling given the President's Day weekend. We're seeing less inflows into Bitcoin because of those ETFs as well. So thus you see the consolidation here. I see Bitcoin going down easily to the 50,000 level, but I really don't see it going down much further, maybe 49, 48. But here's the thing, that selling is going to stop here in about 5 to 6 days, business days, I guess, because now we're king to the market. We didn't used to be in Bitcoin, but now we have to watch the ETFs because they're the new whale that's buying all the Bitcoin. So we're going to wait about 5 to 6 days. I think they're going to be out of Bitcoin to sell. Grayscale is going to drop about to $70 million a day in outflows versus right now they're doing almost $200 million a day in outflows. So once that subsides, we're going to see a run up into the halving, I think, like you've never seen before. And I still predict Bitcoin will be about $60,000 to $67,000 by the halving, which is looking to be about April 18th. And then I still see a strong run up after the halving, like we've seen historically. And I'm still sticking with my $80,000 price target for Bitcoin by the end of the year. So,
oh, that's awesome. You're staying true to your prediction. So if people have been watching, they know you've been touting the same thing here for a few weeks, and so I was just curious if anything had changed. But sounds like you're still sticking with what you see and all your resources that you have behind the scenes of what the average person doesn't see just looking at the charts. But yeah, from the charts it looks constructive, and then everything you said plays right into what the charts are showing. So yeah, I think maybe an entry for people.
This is going to be good. I would watch it over the weekend. This weekend is going to be, I think, the slowest weekend for Bitcoin. I see this consolidation continuing all the way to Monday because we're not going to have any more inflows, obviously, from the ETFs. But the best indicator, and if you guys wanted to go check this out, the best indicator that you guys could watch is go watch the volume on both Fidelity and BlackRock's ETF. It seems to be a very good indicator. It's a lagging indicator. So 2 days later, it seems to increase in Bitcoin price if they have some big inflows. So if you ever see, a lot of trading volumes in either of those ETFs, you can watch that and reasonably predict Bitcoin's going to go up about 2 days later. So, and I know Will saying 80,000 is huge, but I don't see that off the table based on the mathematical approach that I've seen, as long as these ETFs continue to produce at this rate. Obviously, if they stop buying, then that number is going to be out the window, but I don't see them subsiding with their buying this next little bit here. I think it's just going to only continue to stay the same or better. So anyway, interesting to note here.
As we call them, you listen, listen to the experts. That's why we do these shows, right? People that have experience. And I've got 27 years in trading options in the market, but I don't have anywhere near the crypto experience you do. So I love the show each week, not just to talk about what I see in the markets, but to hear your views in the crypto world. So people watching this are getting some great information, and I look forward to the continued growth of the HUBB Financial channel. I think this is awesome, and you're a great host. So I think this is a good source of information for people.
Well, that was heartfelt. Well, hopefully we can provide a rounded, whole. Yeah, that was right there, Rob. That's gonna tear me up here.
No, I don't talk fluff. I don't just try to keep things real, because there's so much of that out there in the investment world, right? I mean, there's so much stuff that's spouted, and people have ulterior motives and all kind of stuff, and you just never know what's real and what's not. And I think that you're someone along the lines of my viewpoint that likes to keep it real. So I think it's awesome for the folks.
Exactly. Well, I appreciate it, and I appreciate you all for watching the show. We have one last question here that we'll probably hit, and I would like your take on this too, Rob, because I think you might have a better take on this as well. Will asked, will the stock market, if it has a sharp correction, do you think that Bitcoin will follow? I have an opinion, but I kind of want to hear yours first here.
Well, I think they're two different animals, so I don't feel like that they go hand in hand at all. I think there was a viewpoint at one time, and I put Coinbase up here because we had talked about that before, and it's held this support here pretty darn well, right around 160. And not to get away from the question, but the fact that Coinbase, I was concerned about. You hear the rhetoric, and that's what I was just talking about. People say things with ulterior motives, and you were saying that there's still an awful lot of trading being done on Coinbase, even with the Bitcoin ETFs out there, et cetera. I think watching that 160 level is key. If it can hold that, I think that's very constructive for the future of the stock Coinbase. But going back to the question, I just don't think that they're correlated anymore. I think there was a viewpoint at one time that they were. I just don't think that happens anymore. And I think the crypto world is its own animal, and we can, look at the charts, et cetera. But that's my viewpoint. Curious as to yours.
You might be opening up a can of worms here now. You just hit on so many things that I want to touch on, but you nailed it. I think they are two different animals, and a lot of people talk about the depegging of Bitcoin to the market. Bitcoin is more of a whole different beast that people are trying to escape the market to get into the decentralization of Bitcoin. But at the same time, you do have people with feet in both pools, and those people are going to still walk at the same pace, right? So you do have big investors that if they're hurting in the market and they feel like there's going to be some risk to that exposure, they may de-risk here as well, because they're going to think everything's tied together. But at the same time, Rob's right, it's not tied together. We're working with two separate animals, and decentralization should take precedent in this case, and people will start to realize that that's the actual value of Bitcoin and see that hedge against the global market as it sits here today. They're going to start to see safety in Bitcoin as that happens. But right now, I think it is still going to iterate a little bit, but you're going to see that depegging more and more as Bitcoin continues to mature here. And you talked about Coinbase, but Coinbase, there is a ton of trading going on over there on Coinbase. You think about these ETFs right now, and I don't know if you know this or not, Rob, but Coinbase is the custodian for most of those ETFs. So of that Bitcoin being purchased every single day, it's being held on Coinbase. So Coinbase is the main market maker for all those trades, OTC or not. But Coinbase right now is at an impasse because their OTC desk is drying up, which what that means is right now they have a certain level of Bitcoin that they've had, and right now they're an 8-year low of Bitcoin held on their OTC counter for these ETFs to continue purchasing. And once that runs dry, people are going to have to either start selling their own Bitcoin to these ETFs, or these ETFs are going to have to start paying some huge prices, which means supply crunch and shock like you've never seen in Bitcoin, which is why I still continue with my thesis. Bitcoin's headed higher because there is going to be no supply here soon. So, but yeah, Coinbase custodian right there, and there's going to be a lot of trading over there. So interesting you brought that up.
You taught me something again. You taught me something again. What they talk about on the financial networks is obviously not what's going on. And, there's always ulterior motives with these big people. And we used to talk about this all the time, that when there were more floor traders, right? There's so much electronic trading now, but when there was more floor traders, they would start rumors. And you've seen the old psychology experiment. You start a rumor and it just grows, and they would start rumors to move stocks or markets, and then it would quickly rebound after the initial shock. And I think the same thing was going on there with Coinbase, is they tried to push it down probably to find a better entry to get in. And you just don't know what's going on behind the scenes with the big boys unless we have experts like you talking about it. I just wanted to say one other thing before we go, Brandon, and I think this is really important. I do watch the bond market. I watch Rick Santelli every week when he talks about the results of the bond auction, usually at 1 p.m. Eastern time. And he's just been spouting about how much issuance the U.S. is doing, the amount of debt that we're acquiring. And he's given 2 different auctions, the 5-year, and that was last week. And then this week, the 20-year auctions, a D or D minus rating. And basically what that means for those that aren't familiar, it means the bid to cover is lower. And so there's not as many people vying for the securities being offered, the bonds or treasuries or whatever being offered. And so interest rates have to go up in order to get those sold so that we can continue to just go further and further into debt. And I do think underlying all the things that we've talked about, that there is a viewpoint that if we continue to do this, how long can that dollar stay strong like this? And that, digital currency, who knows where we are in the future with the amount of debt we continue to develop at some point in time, or are we going to look towards digital currencies more favorably than we do the dollar? It's something, it's a ways away, but it's just something to keep all in mind out in the future, I think.
Yeah, I mean, I couldn't agree more. And it's so people are so adverse to like transitioning over to Bitcoin, but really we're working on a digital currency right now, the digital dollar. I mean, you look in your bank account right now, all you're doing is moving numbers around, right? You're just moving numbers on a
Right.
screen. So it's all we're dealing with right now. So I'm glad with your openness and the other thing. I mean, I feel bad for a lot of people that are getting narrowly fed this picture of Bitcoin with CNBC and some of the news resources when there's so much more information out there that people are not getting, and they just have no clue what the real truth is behind Bitcoin and those other things. I would encourage people to learn more. We do so much education. I work for a separate network that we do so much education on crypto and Bitcoin and stuff, and I think it's important to feed people this knowledge. So I'm glad that we're able to touch on this just a little bit. So Rob, as always, this has been one of the highlights of my week. I love doing this show with you, and I love your reads on those charts. I think that's so valuable for me. I mean, the triangle approach, that was educational for me to see that and understand that, because I've been watching some other charts that I see that triangle forming, and I'm like, which way is it going to break? And now I don't know. So this is going to be, now I have no clue. So what am I going to do? Anyway, thank you all for watching the show. If you haven't subscribed, do so right now, and we'll be back here next week and again with another market review and update. As for now, we'll see you in the next one.
Take care, everybody. Have a great weekend. Thanks, Brandon.
We'll see you.